Today, I want to discuss SoFi, giving you an overview of what's happening with the company, some recent data, and the factors influencing its movement. Let's dive into it. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Right now, SoFi is at 4.58% with a high of 9.07 and a low of 8.63 and about 30 minutes left in the trading day. For a Friday, which usually sees lower trading volume, there's been significant activity, with 32.6 million shares traded compared to the 40.3 million average. Just like yesterday, there's been a lot of buying on the secondary market, and we can probably expect more before the close as market makers cover options. This is similar to what happened last Friday. Last Friday, SoFi stock rose as market makers began covering a large number of options that were set to expire in the money. Additionally, short sellers started returning shares, contributing to the upward momentum. Today's scenario seems to be unfolding in a similar way. However, it's important to note that there hasn't been any major news from SoFi itself, no new SEC filings or company updates. The stock's movement appears to be riding on the overall market sentiment. Speaking of broader data, the Producer Price Index (PPI) data released today was somewhat mixed. The month-over-month numbers were slightly better than expected, while the year-over-year figures were a little higher. This mixed data has sparked some speculation about the Federal Reserve's next move, particularly whether they will cut interest rates by 25 basis points at their meeting on November 7th. Even though several Federal Reserve officials have suggested if the inflation data were uncertain, there wouldn't be any rate cuts, I still believe that a 25 basis point cut is likely. In my view, the data is pointing toward that outcome. But of course, you should make your own conclusions based on what you believe is right for you. On the institutional side, we've seen an increase in positions as reflected in the latest round of 13F filings. Many institutions have been adding to their positions in SoFi during Q3, signaling their growing confidence. However, here's something interesting. Some filings show positions at zero, which I believe indicates that these institutions might be shorting the stock. Currently, 13F filings do not require institutions to disclose short positions, which is why we see these zeros. This is where the new SEC transparency rule could have a significant impact on SoFi because institutions shorting the stock may not want to be seen as the bad guys, as we've seen with entities like Citadel. Currently, SoFi is trading at around 9.03, and we'll see if it maintains this level. If big investors continue buying and momentum stays strong, I wouldn't be surprised to see SoFi reach $10 soon. The only major factor that could disrupt this trend would be a significant escalation in geopolitical tensions, particularly in the Middle East, but that situation appears to have calmed down for now. All in all, SoFi has been on a strong run recently and looks poised to continue its upward trajectory. Over the past month, SoFi is up 27.35%, and just in the last 5 days, it has gained 6.3%. This is great news for those who have held on to their shares through the ups and downs. While I'm not a fan of the phrase diamond hands, which is often associated with meme stocks, in SoFi's case it seems fitting given its recent performance. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.